SMCI stock is the worst over. Two crucial things to watch. Hey, what's up everyone? It's QV Investment Research here, and welcome back to the Investors Community channel. Today, we're diving deep into SMCI stock. As many of you know, SMCI has been facing some serious challenges lately, and its stock price has taken a beating. But amidst all the negativity, there are two crucial things investors should be watching closely that could signal whether the worst is truly over for SMCI. If you're invested in SMCI or considering adding it to your portfolio, you definitely don't want to miss this analysis. If you enjoy our content, be sure to hit the like button and subscribe for more valuable insights. We're dedicated to bringing you the latest stock market news and analysis to help you make informed investment decisions. All right, let's get started. Now, for those of you who haven't been following the SMCI saga, let me give you a quick rundown. SMCI, a company that was once a darling of the stock market, has recently found itself in hot water. The company has been under intense scrutiny due to some accounting irregularities. These discrepancies were not minor. They were significant enough to raise eyebrows and cause concern among investors and regulators alike. This has led to delays in filing their financial reports, which is never a good sign for any publicly traded company. When a company can't meet its reporting deadlines, it sends a signal that there might be deeper issues at play. It erodes trust with investors and creates a lot of uncertainty. Investors rely on timely and accurate financial reports to make informed decisions. Without them, they're left in the dark, and that's a very uncomfortable place to be. But here's the thing, SMCI has brought in a new auditor, BDO, to help get their financial house in order. BDO is a well-respected firm with a track record of helping companies navigate through financial turmoil. This is a step in the right direction, but it's just the first step. Bringing in a new auditor is like calling in a specialist when your general practitioner can't figure out what's wrong. It's a positive move, but it doesn't guarantee a quick fix. The real question is, how quickly and effectively can BDO complete these financial reports? Speed is of the essence here, but so is accuracy. Rushing through the process could lead to more errors, which would only compound the problem. Investors need to be laser-focused on this. They need to monitor every update, every press release, and every financial statement that comes out of SMCI. This is not the time to be passive. Timely filing of these reports is absolutely crucial for SMCI to regain the confidence of the market. The longer the delay, the more trust is eroded. And in the world of finance, trust is everything. Any further delays, or even worse, a qualified opinion from BDO, would be a major red flag. A qualified opinion means that the auditors have found issues that prevent them from giving a clean bill of health. This would be disastrous for SMCI. It could signal that there are deeper operational issues within the company that go beyond just accounting errors. Think about it. If the financial reports are in disarray, what does that say about the company's overall management and internal controls? If a company can't even get its financial reporting right, how can investors trust them to manage their operations effectively? This is a fundamental question that every investor should be asking themselves right now. It raises serious doubts about the company's internal controls, its management team, and its overall ability to execute its business plan. These are not small issues. They go to the very heart of what makes a company viable. That's why the progress on these financial reports is the number one thing investors need to be watching right now. Every day that goes by without a clear resolution is another day of uncertainty and risk. It's like waiting for your test results after a medical checkup. The longer it takes, the more you start to worry. You begin to imagine all sorts of worst-case scenarios, and the anxiety can be overwhelming. The longer it takes, the more anxious you get. And in the world of investing, anxiety can lead to panic, and panic can lead to poor decision-making. This is why timely and accurate information is so crucial. And if the results come back with bad news, it's a sign that you need to take immediate action. Bad news in a financial report is like a red flag in a medical test. It means something is seriously wrong and needs to be addressed right away. The same goes for SMCI. Investors need to be prepared to act decisively based on the outcome of these financial reports. This is not the time for hesitation or second-guessing. Investors need to be prepared to act decisively based on the outcome of these financial reports. Whether it's buying, selling, or holding, the decisions made in the coming days and weeks will be critical for their financial future. Okay, so let's say SMCI does manage to get its financial reporting back on track. This would be a significant milestone for the company as accurate and timely financial reporting is crucial for maintaining investor confidence and ensuring regulatory compliance. It would also allow SMCI to focus on its core business operations without the distraction of financial uncertainties. That's great, but it's not the end of the story. Financial stability is just one piece of the puzzle. The real challenge lies in navigating the competitive landscape and meeting market demand. These factors will ultimately determine SMCI's long-term success and sustainability. The next crucial factor to watch is market demand for SMCI's products and the competitive landscape. Understanding these elements is essential for making informed investment decisions and for the company's strategic planning. Remember, SMCI operates in the market for liquid-cooled server solutions. This technology is vital for data centers that require efficient cooling to handle high-performance computing tasks. Liquid cooling is more effective than traditional air cooling, making it a preferred choice for modern data centers. This is a niche market, but it's a growing one, driven by the increasing demand for high-performance computing. As more industries adopt data-intensive applications like artificial intelligence, machine learning, and big data analytics, the need for efficient cooling solutions will continue to rise. Now, SMCI used to be a dominant player in this market, but the recent controversies have definitely hurt their reputation and given competitors an opportunity to grab market share. Competitors have been quick to capitalize on SMCI's setbacks, introducing new products and aggressively marketing their solutions. So, the question is, can SMCI regain its lost ground? This will depend on several factors, including their ability to innovate, their marketing strategies, and their customer relationships. Rebuilding trust with customers and partners will be crucial. To answer that, investors need to look at two things. First, they need to assess the overall market demand for liquid-cooled server solutions. This involves understanding the current market size, growth projections, and the factors driving demand. First, they need to assess the overall market demand for liquid-cooled server solutions. This includes analyzing industry reports, market research, and trends in data center technologies. Investors should also consider the impact of emerging technologies and regulatory changes on market demand. Is the market still growing as fast as expected? Are there any signs of saturation or slowing growth? These questions are critical for understanding the long-term potential of the market. Investors should also look at regional variations in demand, as different markets may have different growth trajectories. Are there any new trends or technologies that could disrupt the market? For example, advancements in cooling technologies or shifts towards more energy-efficient data centers could impact the demand for liquid-cooled solutions. Staying ahead of these trends is essential for maintaining a competitive edge. These are all important factors to consider. Investors need to have a comprehensive understanding of the market dynamics to make informed decisions. This includes not only current trends, but also potential future developments that could impact the market. Second, investors need to analyze SMCI's competitive positioning. This involves looking at the company's strengths and weaknesses relative to its competitors. Key areas to examine include product quality, pricing, customer service, and innovation. Who are their main competitors? Identifying the key players in the market is essential for understanding the competitive landscape. This includes both direct competitors who offer similar products and indirect competitors who provide alternative solutions. How do their products and services compare to SMCI's? This involves a detailed analysis of product features, performance, and pricing. Investors should also consider customer reviews and feedback to gauge the market perception of SMCI's offerings. Are they gaining or losing market share? Market share trends can provide valuable insights into a company's competitive position. A growing market share indicates strong performance, while a declining market share may signal underlying issues. This analysis will give investors a better understanding of SMCI's ability to compete in the long run. It will also help them identify potential risks and opportunities, allowing them to make more informed investment decisions. The good news is that recent earnings reports from companies like Dell suggest that demand for SMCI's products remains strong. This indicates that despite the challenges, there is still a significant market for their solutions. Dell reported strong sales of servers using SMCI's liquid cooling technology, indicating that SMCI is still a valuable partner in the server market. This is a positive sign for the company's future prospects. This is a positive sign, but it's just one data point. Investors should not rely solely on this information but should continue to monitor other indicators and market trends. Investors need to continue monitoring market trends and competitive pressures to get a complete picture of SMCI's long-term prospects. This includes keeping an eye on industry developments, competitor activities, and broader economic factors. Remember, even if the worst is over in terms of their financial reporting, SMCI still faces an uphill battle to fully recover. The company needs to rebuild its reputation, regain market share, and continue to innovate to stay competitive. The market is constantly evolving, and SMCI needs to prove that it can adapt and thrive in this dynamic environment. This will require strategic planning, investment in research and development, and a strong focus on customer satisfaction. Only time will tell if SMCI can overcome these challenges and emerge stronger than before. So there you have it. We've covered the essential aspects that investors need to focus on when evaluating SMCI stock. Those are the two crucial things investors need to watch when evaluating SMCI stock. The first is the company's financial reporting. This includes their earnings reports, balance sheets, and cash flow statements. These documents provide a snapshot of the company's financial health and can indicate whether they are on the path to recovery or further decline. The progress on their financial reporting will be a key indicator of whether they can overcome their current crisis. Investors should look for improvements in revenue, profit margins, and overall financial stability. Consistent positive financial reports can boost investor confidence and drive the stock price up. The second crucial factor is the market demand for their products. This will determine their long-term growth potential. Investors should pay attention to market trends, consumer preferences, and the competitive landscape. A strong demand for SMCI's products can lead to sustained revenue growth and a higher stock valuation. Investing in a company facing challenges like SMCI can be risky. There are uncertainties and potential pitfalls that could impact the company's performance. However, with high risk often comes the potential for high reward. If SMCI can successfully navigate through its challenges and capitalize on market opportunities, investors could see significant returns. But it can also be highly rewarding if the company can turn things around. A successful turnaround can lead to substantial gains for those who invested early. It's important to stay informed and keep a close eye on the company's progress. By closely monitoring these two factors, investors can make more informed decisions about whether SMCI is the right investment for them. Staying updated with the latest financial reports and market trends will provide valuable insights into the company's potential. As always, please remember that this is not financial advice. Investing in stocks involves risks, and it's crucial to do thorough research and consider your own financial situation before making any investment decisions. And I am not a financial advisor. My analysis is based on publicly available information and my own interpretation of the data. It's always a good idea to consult with a professional financial advisor who can provide personalized advice based on your individual circumstances. This is just my own analysis of SMCI. I encourage you to look at multiple sources of information and form your own opinion. Diversifying your research can help you make more balanced and informed investment decisions. And you should always do your own research before making any investment decisions. The stock market can be unpredictable, and it's important to be well prepared and informed. See you in the next video. I hope you found this analysis helpful and informative. Don't forget to subscribe to not miss out on more helpful videos. Your support helps us create more content to guide you through your investment journey.